Okay. Lots of big earnings this week. Today alone, Microsoft and Meta. Eli Lilly, another big company, 850 billion market cap. AbbVie. And Meta beat top and bottom results. Top is revenue, bottom is earnings. Top of the income statement, bottom of the income statement. But the stock went down. Guidance wasn't so great. I didn't really read into it too much, so let's see if they give more information. The Meta earnings results. Let me know in the comments if you know why the stock went down. It went down like 5%, I think, after hours. Let's see, 3%. It went down 3% after hours. I remember at $40 at IPO, I got it at $40. Now I should have just stuck with my guns. At one point, I was gonna just go all in on Meta and just buy Meta. I don't know what changed. I think I forgot the strategy. So I think when you have a strategy or an idea, write it down so you can go back to it. I used to always say Meta and Costco, those are the best stocks. I wish I just stuck with that and not deviated and trying to like pick up all these crappy stocks. And because oftentimes you have a portfolio and maybe 2, 3, 4 stocks are like dragging everything up, and the other stocks you bought and sold over the years just were a waste. Just you can't really make money day trading. If somebody says it, they're pretty much lying. I don't know anybody who really made good money day trading. Okay, so let's see, third quarter earnings. Wednesday night streaming. Yeah, I was just in the mood. I made a video just now on Verizon. So sometimes you're just in a mood, you're in a good mood. So in other days, you're just not feeling like talking. So let's see. Facebook parent Meta announced its fiscal earnings. The company forecast Q4 revenue between 45 and 48 billion. Analysts were expecting 46 billion. They said capital expenses to grow significantly in 2025, which we know all these companies are spending a ton in CapEx, the AI boom. And I think they have to spend that much just to say they're participating. Because if they're not investing a lot towards AI and towards the future, people just don't like it. They want a company that's just going to spend tons of money. But that's the name of the game. JB, thank you. Appreciate it. Been a minute since I've caught a live. Fed funds went down. Mortgage rates still went up. How does that happen? That's crazy, right? David, what's up? Fed funds rate. Fed fund rate to cut. Fed Reserve to cut by 25 basis points at next 2 meetings. Well, they didn't cut it. They're projecting to cut it, right? The next 2 meetings. November 7th, right? I do remember that date. Okay, the U.S. Federal Reserve will likely cut rates by 25 basis points on 11/7. And like, it's kind of like a stock. Stock could go way up and way down well before the company actually makes money. If a company says next year we're going to make $1 billion, right? A profit of $1 billion. And if the initial forecast was 500 million profit, and then they say we were revising it up to 1 billion, the stock will go through the roof well before they actually make that money. Of course, when next year happens, if they start to fall short of the $1 billion profit, then the stock will come back down. But you can make a lot of money on a stock before the company ever does anything. It's kind of like poker. You don't have to have a good hand. You could actually have the worst hand. But if you can convince everybody at the table you have the best hand, then you could win. You can bet on who will win the election on Robinhood. Really, what's the odds of that? Like, what are the over under? Since the U.S. Central Bank kicked off its long-awaited easing cycle last month they did cut 50 basis points last month. That was a big cut because every quarter people were saying it's going to be the time. We were expecting like 3 or 4 rate cuts this year, and we finally got our first rate cut, and it was a big one too because most of the time it's 25 basis points, but they did 50 this time. But it's a weird economy now. It's always weird, really. But my wife said to me yesterday that she heard somebody say the market's going to, the stock market will go down 50% next year. It's going to be bloodshed. It's going to be the worst market ever since the Great Depression. So she was concerned, and I said, people have been saying that every day for 15 years that I can remember, that it's going to be worse than the Great Depression. We're in a worst economy ever. But it's kind of like when someone says that, it's like when a company talks about its products, they're always going to say how great the products are. They're not going to ever say anything negative. They're going to always look for all the positives because they want you to buy the product and they would make more money. It's like a stock market. If somebody owns a stock, they're gonna talk about it highly because they're gonna just focus on all the positives. And if negative news comes out, you just kind of it goes past you. Like if you love Trump, any positive story about Trump will resonate with you, and any negative story you forget about it real quick. But let's go back to Meta. So why did Meta go down 3%, even though they beat on top and bottom line? Well, the economy seems heavily buoyed by insane amounts of government spending. The minute we lower spending, well, they can't really lower spending. And actually, if you look at it, I think I did this before. If you look at how much we're spending, the debt relative to how big we are as a country, it's actually not, we're not getting worse. Let me try to, okay, what's the debt versus GDP? Let me try to show you what I mean. Gross debt. Let me just try to convey it a little, what I mean. This is why, Alex, what's up? How's Amazon going? Okay. Okay, so say okay, say I said I had 10,000 of debt, right? Like $10,000 of like credit card debt or whatever type of debt, the bad type, I guess. You would say it doesn't sound that high, right? $1,000. But what if it was like, if my salary was $5,000? My annual salary is $5,000. Then it's really high, right? And I go, whose salary is $5,000? I say, well, no, it's my great, like if I said, if it was 1940 and like your great grandfather, for instance, that was their salary, their debt. So it sounds really bad when you look at it that way. But if it's 1980, I don't know, I'm just guessing at the average salary, and you have $10,000 of debt, it's not that bad, right? And if your salary is $90,000 and you have $10,000 of debt, it's nothing, right? You could pay that off in a few months. So it's always relative to the situation. Like if I said, actually, I have $1 million of debt, you would say, oh my God, you're in bad shape. You're going to go bankrupt. You're going to file bankruptcy. And I say, no, well, what if my net worth is 10 million and I have $1 million in debt? Like, I own homes, I have businesses, I have assets, I have a yacht. So you have to look at things on a relative basis. You can't say $1 million of debt, therefore you're going to be bankrupt soon. You know. So yeah, for regular people like me and you who don't make that much money a year, we probably make between 50 and 120,000, pretty much all of us, I would say, in that range if we're working full time. So it's just like you have to look at a relative basis. So to say we have $1 trillion in debt, the U.S. has $1 trillion in debt. $1 trillion would be terrible for like Cambodia. If they had $1 trillion in debt, they would never be able to pay that back. So if you look at the debt, I did it once before. If you look at how much debt we have relative to our GDP, how big we are as a country, it's not that bad. It's actually not even going up that much. Debt. I don't know if I can figure it out, but I'm just saying, look at it on a relative basis. Because if you're 18 years old and you have $100,000 of debt, that's not good. That's just crazy because you're probably not making any money. But if you're 38 and you have $100,000 of debt, it might actually be in a great situation. I wish they did a chart, but it doesn't matter. So yeah, so Meta, okay. The company forecasts Q4 revenue between 41 and 48 billion. Analysts, the company also said it expects CapEx to grow. It doesn't sound that bad. The stock fell 3% after hours. We anticipate full year 2024 CapEx 38 to 40 billion. Okay, it was initially 37 to 40 billion. Now it's 38 to 40 billion. So they upped it a little bit full year CapEx, but not by $1 billion on the low end. So we continue to see significant CapEx growth. For the third quarter, Meta saw earnings $6, revenue $40 billion for the quarter. It's amazing. Wall Street was expecting EPS of $5.25. So EPS was expected to be $5.25, and they reported $6.03. Revenue forecast, the street thought $40.2 billion. They got $40.5 billion. So they easily beat top line. And top and bottom line, because EPS is bottom line. EPS is earnings so EPS is earnings, net income over shares outstanding. Microsoft they beat 1.5% on revenue, 6% on earnings. A lot of these companies set their target, their revenue and earnings target, not too high, because they want to be able to just beat it. That's the goal. You want to at least beat it. So if that's like the worst thing is if you set your target and you don't beat it. Because even if you have a good quarter, like if I said, what's your 2026 target for income, like how much you make at your job. So say you made $80,000 now this year in 2024. So your target, I said 80, right? So your target is 90K. So if you stayed the same job, you might hit that target. But say you get another job and now you go to 110K. So they don't want to ever go too far out. That's what I'm saying. NVIDIA they kill their target. They forecast 10 billion of revenue and they end up with like 30 billion. So they have a different thing going. Google did good, right? Google's earnings, the stock went up. It was up like 6-7% the day they released earnings. It did come down. Microsoft shares drop on disappointing Azure growth. Azure is the big thing. That's their cloud computing software. Azure is the second largest cloud computing company in the world. Amazon Web Services is always been number one, and Azure is number two, right? It's Amazon, Microsoft, Google Cloud. I feel like I'm missing some, but what other cloud computing? I know Baba is like usually fourth. Okay, yeah. AWS is 31% of the market. Azure is 24%. Google Cloud is 11%, and Baba is 4%. It's always in that range. But that's where a lot of these companies' profits are the cloud computing, because it's such a scalable, profitable, high margin business. Like Amazon, 90% of its profits are in cloud. They sell so much stuff online. They're the largest e-commerce company in the world. But they don't even make that much money on e-commerce, especially international e-commerce. I think they're losing money or breaking even. It's all in the cloud. Okay, so what happened with Azure? Why did Microsoft increase both sales and spending in September quarter? Shares dropped in late trading after the software maker forecasted slower quarterly cloud revenue growth. So it's not like this quarter they release poor earnings. It's the forecast for the future, because you can't grow like 20, 30, 40% every year. At some point, there's not enough people in the world to just buy your products. Reflecting the company's struggle to bring data centers online fast enough. It's just the demand. They can't even build out the infrastructure fast enough. Like, the demand is there. It's just they can't supply it. They need somebody like NVIDIA to help supply. It's the demand for AI. I hope it comes to fruition, this AI thing. I don't know if it will, but sales from Azure cloud computing will rise 31 to 32% in the current period. Azure revenue posted a 34% gain for that period. It's a pretty big gain, 34%, because they don't have a small number. Like, their base, like if your salary is like 40K, you can grow 50%. It's not, it wouldn't be unheard of to go from 40K salary to 60K salary if you switch jobs. But once you get a high number, it's hard to grow. What's up, Kevin? The dour outlook. I'm not even dour. Relentlessly severe, gloomy. I don't see that word too much, dour. The gloomy outlook followed an otherwise upbeat report, during which the company said first quarter revenue increased 16% to $66 billion, and profit rose to $3.30 a share. $66 billion for one quarter of revenue. But on a call with analysts, CFO Amy Hood said some data center capacity Microsoft has been counting on for its push for AI didn't materialize. That will constrain revenue growth for Azure. We are in short supply. Damn, that sucks. Because I have Microsoft. I've been buying a lot of Microsoft on my wife's account, and I was doing well. I was up like 20%, but it's really pulled back, Microsoft. Yield max. I don't really follow that too much. I think you're playing with fire with stuff like that. Yield max generates income by pursuing options-based strategies. So yeah, they use options to. It's an ETF that uses options to give you a really high dividend. I think you're wasting money, but I said that about other levered ETFs like UCO, and I was wrong for a long time until I was right. It's kind of like I mean, look at this. This is I think it's a triple levered oil ETF. Look at it, was 136. It's hard to tell in this chart, but and that in 2020 it fell to $4. I don't know if you could see. And I was saying, people were saying, because I made a video, it was one of my earliest videos. I said it's really junk. It has to go down in the long run. And it wasn't going down. It went from 4 to 50. But now you can see it's coming back down. The technicals for Microsoft don't look too hot either. Yeah, what's going on? Yeah, so Microsoft, they did report good earnings, good results. I guess the forecast wasn't so great. if I had just dumped 100K in Mo and 100K in Chevron during the 2020 low, I could have quit my job by now. Would you have quit your job, you think? So let's say 2020. If you picked up at the bottom, okay, say you got the very bottom at $35. Okay, if you invest $100,000, okay. The share price, if you got at the very bottom, 35. You would have had, you're saying because you could live on the dividends, right? Okay, so they're paying a $4 annual dividend. You can't look at the yield because the yield is based off of the current price. Everybody has a different yield because even if you bought it yesterday and your friend bought it today, you have a different yield. You have a different cost basis. Let's see. I mean, if you bought it in 1970, yeah, I could see that, but I don't know. But we'll see. Let's just see. They do raise their dividend every single year. Okay, annual dividend. Okay. Okay. Dividend. So you get $11,000 in dividends for Mo. What was the other one? But with yield max, you really have to time it. You can't buy and hold. You wouldn't. It would never work out unless you happen to buy it at the very bottom. But it will come down. It will keep going down over time. Mathematically, you can't really make money with those things in the long term. In the short term, if you buy it, you have to sell within a few months because eventually it will go down. If you bought NVIDIA, you could retire. So they pay $6.52 in annual dividends. Yes, so you couldn't really retire. Because the thing is, let's just say you had $1 million, and you did what you said. You bought Mo in 2020, and you got a 35, which I guess is good because now it's more. You get 114K in dividends a year. So that's probably good. You could probably live on that. Now like in the next few years, but unless the stock goes up a ton, and generally these stocks that pay a high dividend don't go up that much. They don't have that. It's not like Microsoft, like stocks like that, like lots of appreciation. They go up a ton, but these dividend paying stocks, they generally don't go up that much. So it's kind of like if it was like 1980 and you got $50,000 a year in dividends, that's like today getting $115,000 a year in dividends. So 10, 20, 30 years from now, $115,000 won't be that much. unless you start selling your shares, but then you won't get the dividend if you start selling the shares. So what is it? Yield max? Is that it? This yield max Magnificent 7? Okay, so it was $20. Then it went down to, so it started in January. It's definitely down since it started, but it's not down that much. I don't see it. It doesn't pay a dividend. I thought that's the point. It doesn't pay a dividend. Is that correct? No, it does. Well, they cut it a lot. Let's do let's reverse engineer. Okay, so here's a dividend. Okay. Okay. So it looks like the first dividend they paid. So it's a monthly dividend. Okay. It's a monthly dividend. Chart. I hate Yahoo's new website. Everything's so slow. Okay. So it was $20 at IPO, and then it went down to $19.50, then back up to $20. $20.50, $19.50, May. So it fell to 19 in July. So it's around 19. They switched last month from monthly to weekly. Oh, I see. Okay, that's why it went down. They switched to weekly dividends. Huh. So the peak dividend was 68 cents, which is 17 cents per week. They really lowered it a lot this last week, 6 cents. So if you invested $1,000, if you put $1,000 every week, this is how many shares you would have. So the dividend. Does anybody own this stock? When did they did a weekly this? Okay. I wish they put a yield on it. It would make it a lot easier. I don't have to go through all this trouble. So 43 cents. For a quarter, for a month. YMAX. Which one am I looking at? I'm looking at YMAG. So this has gone down a bit. It was 21, now it's 17. A yield max. Here we go. It doesn't really show the yield. So okay, you own shares. How's the results? Do you feel like, are you getting a lot of dividends? I guess it depends how much you own, but I don't know. Yeah, maybe. I guess it looks pretty good. It seems like it's paying a decent dividend. Go for it. I thought, what's their, what are the holdings? It's just options, right? It's all options. So they own their biggest holding is Babo, which is an options on Baba. Their portfolio is negative 2% of stocks. So they're short. Are they shorting? It's longing, right? It's all longing, the options. Let's look at Babo. It's hard to tell what. It just seems crazy, but yeah, maybe I have a decent amount. Almost feels too good to be true. I'm still testing it out. So you're seeing returns. So that's good. Yeah, maybe it's yeah, Google had good earnings yesterday. It went up a lot. They beat EPS by 15%, revenue by 2.4%. Yeah. Like I have kind of like my wife's investments and my investments. So I'm heavy in like Berkshire Hathaway, Meta, ET, and she's heavy in like Google, Netflix, Apple. Well, Apple not heavy, but she has Apple. Amazon. Okay, Alphabet stock surged 6% in morning trading after they beat top and bottom line. $88 billion of revenue for the quarter. So profit went up 37% from the same quarter last year. Revenue went up 15%. But they were up a lot more. They were up like, this says 11% at one point. I remember seeing it. It was up like 7-8%, but then it came down. That's usually what happens. There's a lot of buying activity. Then people sell off. Advertising revenue topped $66 billion. Last year was $60 billion. Cloud revenue, $11.4 billion, up 35%. And they're third in cloud computing. So, because remember, like, how people always say, if you look at like the top 10 companies in like 1980, and then compare it to the top 10 companies in 1990, and if you notice, most companies in the top 10 are not in the top 10 years later. And it's almost like if you look at like 30 years ago, pretty much nobody is in the top 10 30 years ago and today. And that's true for the past, but I think it's different now. I think it's really, these tech giants are just so big. And that's like everything is technology. Because like 100 years ago, or even 50, 60 years ago, things changed so much. It was like, the horse and buggy whip was everything 100 years ago. And then cars were everything. But I don't think there's going to be as much change as there was in the past. Yeah, I got to do a video on yield max because I really have to read up on it. What I'm not too sure about is the underlying securities that they own. Like how do they perform? Like I know it's options, but I don't know. I want to learn a little more about like Babo. They hold Babo. What does Babo hold? I don't know. It holds 66% bonds, 8% stock. Because if you look at any ETF, it's kind of like the way Buffett talks about it. Like you want to know what you're buying. If you're buying something that doesn't generate income, it's probably not the best investment. Oh no, I looked in the wrong time. So holding. So if you buy an ETF like the S&P 500 or any ETF, you should look at what it holds. And it holds Apple, Microsoft, Nvidia, pretty good companies, stable. So it's kind of like it's like investing in a business. You want to know what the business does. If they sell cannabis, that might be a risky investment, especially if it's hard. Even though it's legal in certain states, a lot of like communities don't want a cannabis store in where they live. So if you buy an ETF, you want to look beneath the hood. What stocks do they own? If they own garbage stocks, then maybe you don't buy that ETF. They own solid companies. So like when you look at yield max, like what do they own? I don't know. It's confusing to me. So what are the earnings that are coming up? Today's Wednesday. Tomorrow's Apple and Amazon. So that's a big day. What do you guys think tomorrow for Apple or Amazon? I hope Amazon, they've been doing pretty well the past few years. Amazon earnings prediction. It's really cloud computing. That's what they have a Facebook Meta one too. I'm excited for both. Amazon Q3 earnings preview. Will Amazon rise to record highs or repeat its Q2 horror show? Sheesh. I didn't realize that with Q2 was a horror show. The earnings for Mag 7 stocks are looking strong. It began as stellar note with Tesla. And the company's outlook helped the stock. Tesla doesn't usually report great earnings. They just always say how the future earnings are going to be amazing because we'll have robo-taxis next year. But every year they say that. They never have it. Alphabet is also trading sharply higher ahead of, look at that. Today we have reported Q3 Amazon, Apple. So Amazon's Q3 revenue to rise 10%. That's the forecast on the streets to 157 billion. That's for the year. During Q2 revenue. Yes, this is a pretty big week. The biggest companies in the world. Did I miss NVIDIA? When does NVIDIA? No, they did, right? NVIDIA earnings. Oh no, they're not a normal quarter like everybody else. Most companies are like the quarter ends like March or June or September or December. They're like a weird one where their quarter ends January, April, July, and October. So they're right, July. So they already reported their July because that was, yeah. So they're November 30th is the next time NVIDIA. Well, no, they're not going to report. That's when their quarter ends 11/30. So mid January they'll probably report. Usually it's 6 weeks when the quarter ends. So mid January. When will NVIDIA report earnings? NVIDIA. Okay, October. Did I just read that wrong? Oh, October. Yeah. Okay. Their earnings ends October 10/31. That's when their quarter ends 10/31. 11/20. The report will be for the fiscal year end. Is that possible? They're going to report earnings 20 days after quarter ends? Huh. Okay, so tomorrow, Merck, big company, MasterCard, Lind, the chocolate company, Uber, that should be you guys Uber's done well the past year, I believe. It's up a lot. That's a tough stock. It's kind of like, they're never going to make money, but everybody uses their product. Why is it so slow? It's always so slow now, Simply Wall Street. Yeah, this is a good chart. Come on. So you can see it was 20 in mid 2022. I don't know where the screen went. Okay. So yeah, it was 20 mid 2022. And then mid 2024. So what, 300%? That's pretty big. It's up 300% since mid 2022. Lind is industrial gases. All right, Lindy. I'm thinking. I'm so sorry. I was thinking Lint. I don't know. Yeah, Lindy. It's not Lindy. Yeah, I did a video on Lindy before. Yeah, it's a UK chemical company. Good catch. So they are profitable. Uber, 2023, they had $2 billion of profit. Same in the trailing 12 months. So that was the first year they are profitable. Let's see cash flow. So they had positive cash flow in 2022. So are they going to really blow up? I think yeah, that's pretty comforting, seeing that they did hit profitability, because for a long time they weren't making money. Let me go Simply Wall Street. It's just too slow. So Uber, they're up 81% in the past year. Okay, they IPO'd in 2019 at 40. Kind of right before COVID, like 8-9 months before COVID, they IPO'd. So it came down a lot from COVID, but most stocks ran up, but it came right back down. So you could have got it at a good deal. You could have got it for 20 in mid 2022. It's hard to know. I mean, if you were really bullish Uber and you missed the run up in 2021, it's hard to know when to buy it. I mean, because it hit about 60 in 2021. So when it fell to like 40, it probably looked like a good value, even 30. Then it came down to 20, unless you caught it at the perfect time. You know, one stock I caught at the perfect time, and not many stocks, because I don't really try to time stocks. But this stock, new. Nubank, the Brazilian fintech. I got it at $4.20 in I think in January 2022. Yeah, $4.24 in June 2022. June. So right here in June 2022, I got $4.25. It's almost the very bottom. I mean, I think the bottom was like $3.50 right here. So it IPO'd around $10, $11. And then it struggled. A lot of stocks struggle after IPO. People lose faith in the company. Yeah, Meta turned out well. But percentage-wise, I'm up the most on this stock, percentage-wise. Not ever, but my current portfolio, because I was trying to do some like risky kind of investing. So I have a Roth IRA, and I had like 50,000 in it, and I was trying to do some like just play around with it, and I ended up losing half of it. It was down to 25,000. So I was looking around when it came down. I'm like, what should I buy? Because I don't want to buy something that's really safe. Like, I mean, you can't predict the future, but I was looking for something to like really grow. Hopefully more than it is now. Like I wanted like 10x something. So I saw this stock. I saw it was at a low point. I felt it was at a low point. So I put $25,000 in. It was $4.24, and look at this. It's at $15.66. So about 2.5 years. So 92,000, that's a pretty good return, right? 25,000 I put into it. Now it's 92. I'm up 269%. So in 2.5 years, it's pretty good, 269%. Yeah, I'm happy about that. Like I picked some duds. Like I've done this strategy before where I pick like PetMed Express. I put like, I don't know how much into PetMed Express, like 10,000 maybe. And then I lost like 70% of it. And then I did that with Apcellera. That was one of my worst investments. I kept doubling down on Apcellera. I think I put 25,000 into it, and I ended up, when I sold it, I sold it for like maybe 7,000. So I mean, it took some pretty big hits. You don't see that, but this was one of the few winners. But that's the thing. You don't need to like have. You could even if you get a 20% win rate, 20% of the time you do well, it's a good investment, and 80% of the time it's a bad investment. Like even if you put like, say you put $10,000. Say you just pick 10 stocks. Is that 10? say you put $10,000 into 10 stocks, and you put into account a brokerage account, and you don't even look at it for 10 years. You just you pretend it's not even there, and then 10 years later you come back. Well, I guess the worst is negative 100%. Let's say 5 of the companies are bankrupt. So half the companies you totally whiffed on. One company goes down 90%. Another company goes down 80%. One company is cut in half. One company goes up 1.5 times, so you make 50%. But one of the stocks was like an NVIDIA type, and you killed it. Like it 25x'd. So you don't need, like, in this case, you had only 2 winners, and one wasn't even that amazing. It was just a good winner. It went up 50% over 10 years. Didn't even beat the market. But one of them you picked like the NVIDIA type. That's what SoftBank did. SoftBank made some awful investments, the Japanese investment firm. But the reason they have so much money is because they put like, how much did they invest in Alibaba? They put 20 million in Alibaba, like in 2000. I don't know if they were even public yet, but they were struggling, Alibaba. And they turned 20 million into 60 billion. So just that one investment can take you like way over the top. And you could, like, he's thrown so much money at some duds, like millions and billions at some terrible investments, but he has that $60 billion to work with from that one investment. It's like a baseball player. If you strike out 65% of the time, you could still be the best baseball player ever. Just 35% of the time you get a hit. A 350 batting average is like extremely high. I lost 15,000 on Tel. 1,500 on Tel. Tellurian. Yeah, I was telling people that. I know people were going crazy with Tellurian. Dollar wise, Berkshire is my best investment. Yeah, dollar wise, because I put a lot of money to start. Like if I put like $250,000 into the stock, I would have more than Berkshire, because it's up 269%. Berkshire is up like 150%, I think, since I bought it. Yeah, Tellurian, it's a risky bet. You know, that's what we all want to do. We want to put like $10,000, $20,000 into like NVIDIA, a stock like that, and turn it into turn 10,000 to 2 million. It's just so hard to do. But if you're willing to take the risk, like like 10,000 in Nvidia 10 years ago would probably be like, I don't know, it might be more than 2 million, but say it's 2 million. So you could even, if you're willing to take the risk and you pick 10 stocks and 9 of them you lose everything, it doesn't matter. Because if you told someone I turn 100K into 2.5 million, you're like the hero. And you only got 1 out of 10, 10%. That's like batting 100 in baseball. Yeah. Well, my best percent-wise was Apple. I sold it a while ago, but I made a 10x that investment. That's the best I've ever did on an investment. It was like 17K. I mean, 1,700. Because that's when I didn't have like that much extra money. 1,700 to 17,000. And of course, I'm not happy. I was like, oh God, I should have put more into it. So that was my best investment-wise. Well, actually, my best investment was the business I bought, because I turned I turned 100K to like 2.2 million. I mean, I had to work for that. I mean, I worked hard for 10 years, but I guess dollar-wise, an investment, if you turn 100K to 2.2 million in investment, that's amazing, because you don't do anything. You risk your money, but you don't have to actually, your life hasn't changed. Like, you could still work at make money, things like that. But I had to like put my life into the business, which that's what we got to do. Wait, where were we before? Okay, Uber. So that should be interesting. So Uber revenue, it's not really moving that much the past few quarters. 9.3 billion at 10.7 billion. Like, if you look at these big tech companies, they move even at like what is that? What did Google have? 68 billion of revenue for the quarter. Yeah, the math tutoring business. But not many people make that much money in that business. You have to be good at running a business. It's and willing to take risks, things like that. The Comcast, Total Energies, the French Total Energies is the French. They're like Chevron of France. The oil giants. What's that? Isn't there like a term for the largest oil company? The super majors, right? The super majors. So Saudi Aramco is the biggest. China Petroleum, PetroChina, Exxon, Shell. Here's Total Energies. They're sixth. I mean, for the longest time, it was oil companies were like the biggest in the world. Now they're big, but they're not trillion-dollar companies like tech companies. But forever, it was oil companies were the largest companies in the world, or they held several spots in the top 10. And railroad companies were really big at one point. So Uber, let's see, Friday usually doesn't have much. Oh, Berkshire's Friday. That's big. They're getting close to $1 trillion. Berkshire, they did hit $1 trillion, but they kind of fell short. Berkshire is the first company ever to hit $1 trillion that was not a technology company. the first non-technology company, even though they own Apple. They're not technically a technology company. They're more of an insurance company, if anything, but they're a holding company. They just hold stocks in companies. Enbridge, the Canadian giant oil and gas midstream company. Simon Property Group. I think that's the first video I did on Simon Property Group. Okay. Well, thanks for joining. Total is super major. Yeah, Total is definitely super major. Yeah. Okay. Hopefully this weekend I'll do a stream, and I gotta edit this video before I forget. Okay, thanks a lot. Talk to you later.